so now we're going to get a little bit into the some of the changes that we're talking about with Risk Rating 2.0, and I'm going to call it legacy. Whenever I mention the word legacy today, what I'm talking about is the traditional NFIP program. Part of the big changes of NFI 2.0 was that people were like, oh, my rate's going down. That's awesome. Or, oh no, my rate's going up. FEMA has briefly talked about in some of these areas that premiums were going, $10 to $100 more per month in some areas. They were going down $10 to $100 per month in some of these areas. The conditions where private flood insurance should be accepted on loan types. In 2019, FDIC actually worked with HUD and some other people to accept private flood insurance. So private flood insurance started to be accepted back in 2019 on most loan types, roughly except for FHA, because FHA does not issue loans, they insure them. However, hopefully this month, FHA will be making a public announcement about accepting private flood insurance. They talked about this back in 2020, and then COVID hit, and we've still been waiting for an approval. And so we're hoping to have an approval within the next week or so as they meet with a final bulletin with Congress. So as I mentioned, in the legacy program, which we're going to talk a little bit about now, traditionally flood zones had a big impact on flood insurance rates. Especially flood zone X, you had what's called your preferred rate. May have been $400, $500 a year. You had coverage amounts up to $250,000 on residential, $500,000 on commercial. And then of course you had your contents at $100,000, business inventory up to $500,000. So those were some of the things with NFIP legacy, is that the flood zone was a big rate driver. And today we're going to talk about what the new rate drivers are. We're going to talk about personally some of the experiences we're seeing every day in issuing insurance, some of the struggles customers are seeing, some of the surprises agents are seeing that they just weren't aware of when it comes to this new 2.0 program. So Risk Rating 2.0, really, what is it? They call it an equality in action. So what it was traditionally is that, hey, we want to balance things out. We felt sometimes that other people were paying higher flood insurance premiums for other properties. They call it, creating maybe a fair playing ground when it comes to this new program, is because risk was going to be looked at differently than a lot of subsidized rates. Flood zones, let's say my house is in a flood zone AE, your house is in a flood zone AE, but should we necessarily have the same rate just simply based on the flood zone? Those are some of the things they wanted to address with 2.0. Some of the brief things, you can take a look at this slide here with NFIP versus NFIP 2.0. There's a lot of similarities. There's also, a lot of differences. As you take a look at this, something we'll talk about later, something I created called the fingerprint of flood insurance. And really what it does is talks about the really 5 main factors of driving a flood insurance rate now.